What's up guys, Alvaro here, welcome to the Bilingual Stock Market channel again. In this channel we talk about the stock market, but we do it in two different languages, English and Spanish. So if English is not your cup of tea, you can also watch this very same video narrated by me in Spanish. And in this video I want to go over three special purpose acquisition companies that in my opinion represent either a trade or even a long-term investment opportunity. Please keep in mind that I am not a financial advisor myself, so if any of you wants to either trade or invest in any of the stocks that I am going to be talking about in this video, you have to do your own research work and reach your own conclusions. So without further ado, let's get started. Okay, my fellow traders and investors, and the first SPAC of this video is going to be ticker symbol CLII, or Climate Change Crisis Real Impact First Acquisition Corporation, which wants to take public EVgo. And EVgo, and here you can see their website, is the United States' largest public fast charging network for electric vehicles, after Tesla, of course, and the first company of this kind to be powered by 100% renewable energy. EVgo has more than 800 fast charging locations in 67 metropolitan areas across 34 states, and it is serving as of now more than 220,000 plus customers. This company was founded in 2010, and as you can see on their website, I'm going to scroll down over here, okay, you can see that they have, as of now, more than 800 fast charging locations in 34 states, okay? And if I scroll a bit up over here and I want to read for you guys the vision of this company, it says, EVgo is building the nation's largest EV public fast charging network. EVgo believes in electric for all. I love this, guys. EVgo believes in electric for all. Okay, so this is game over for internal combustion engines. Okay, fuck diesel, fuck gasoline, that's it. The transition between internal combustion engines into electric vehicles is inevitable. That's it, game over. Okay, let's keep on reading. Okay, we put the right chargers in the right places, empowering drivers to charge faster and drive farther than ever before. Okay, so needless to say, guys, here we have a SPAC that, regardless of the current hype in regards to special purpose acquisition companies, but here we have a SPAC that wants to merge with a very well established company since 10 years ago. And on top of that, here in the United States, we have a new government that wants to accelerate the transition from internal combustion vehicles into electric vehicles. And in fact, I remember that President Biden said during his presidential campaign that he wanted to expand furthermore the United States network of electric vehicle chargers. So if this merger happens to go through, there is a huge potential on CLII, no doubt about it. Okay guys, when it comes to the technicals of CLII, here you can see on the 5-day 15-minute chart that we don't really have much data to analyze because the possible merger with EVgo was announced just one day ago. And here we can see another perfect example of how sensitive any SPAC is relative to any news that could potentially come out about a possible merger or acquisition. So take a look at this, guys. On last Friday, CLII, after the announcement of a possible merger with EVgo was announced, went from $13.44 a share up to $29 a share pre-market. It went ballistic. Okay, and then CLII consolidated during regular trading hours between $19.85 a share and $22.85 a share. So my fellow traders and investors, given the fact that we don't have much technical data to analyze over here, starting a position now on CLII is pretty much gambling. But if we see this SPAC next week starting to consolidate at around $19 or $20 a share, that might be an acceptable spot to pick up some shares, either to take a short-term trade or why not to start a long-term position. So CLII, for me at least, is going to be on the top of my watch list for this upcoming week. Okay, my fellow traders and investors, and the second SPAC that I want to tell you about in this video is going to be Ace Convergence Acquisition. The ticker symbol is ACEV. And this is a special purpose acquisition company that wants to take public Achronix Semiconductor, which is a fabless semiconductor company based out of Santa Clara, California. And guys, when we say that Achronix is a fabless semiconductor company, the word fabless refers to the fact that this company doesn't manufacture the chips used in its products. Instead, it outsources the fabrication of the chips of their products from a third party. This company was formed in 2004 and also has a facility in India. The products of Achronix can be used in a variety of different applications such as 5G, networking, artificial intelligence, and the defense sector. A plus that is worth pointing out about Achronix is that its CEO, Robert Blake, has more than 25 years of experience in the semiconductor industry. And I ask you, my fellow traders and investors, do you think that a semiconductor company that does not manufacture its own chips has any chance of standing out in such a competitive industry in which we find companies like Nvidia and AMD? Please drop a comment down below and let me know your thoughts. Okay guys, on the 4-hour chart we can see a very volatile behavior on ACEV as expected, given the fact that this is a SPAC. And since the beginning of January, ACEV has been trading within a horizontal channel, bouncing on and off from $10.86 a share and $11.83 a share. So ACEV could be potentially consolidating within this horizontal channel. And guys, the second it breaks out of $12 a share, breaking the upper line of this channel, it could make a nice move up to the upside, up to $14 a share, which could potentially be a 16% move, which in the case of a short-term trade is nothing to sneeze at. And the RSI is at 48 points on the 4-hour chart, very healthy, not oversold, not overbought. So in my case, guys, I will be keeping a close watch on ACEV, and the second I notice it can break $12 a share, I will be probably taking a trade over here. And the third and last SPAC of this video is going to be Red Bull Acquisition. The ticker symbol is RBAC. And this is a SPAC that came public back in August of 2020. And this special purpose acquisition company wants to take public Fenway Sports Group. And if so, guys, that implies that the Red Sox and Liverpool Football Club will be coming to the public markets. And for those who are not familiar with the sports, the Red Sox is one of the most important baseball teams ever, and Liverpool Football Club is one of the most important soccer, as we say here in the United States, teams in the Premier League, which is the European soccer league that moves the greater amount of money in Europe. So the value of the Red Sox, the baseball team, is at $3.3 billion, and the value of Liverpool Football Club is $2.2 billion. The final merger, if it happens to go through, would be valued at $8 billion. So needless to say, guys, this SPAC looks very attractive to my eyes. I mean, we are talking about a company that owns two of the most successful sports teams ever. Okay, and sport teams make very good money, you know, that comes from publicity, TV, broadcasting rights, and fans attendance in their stadiums, which obviously, you know, the fans attendance as of now is zero because of COVID-19, but eventually when everything gets back to normal will be again an important source of revenue for sports teams. So I will be keeping a close watch on this SPAC. If this deal goes through, I really see a huge potential on RBAC or on Fenway Sports Group. Okay, on the 4-hour chart of RBAC, we can see that this SPAC had a huge pop back on October 9th of last year, going from $10.25 a share up to $14.12 a share. But other than that, it hasn't done much lately. It has simply traded sideways between $10.60 a share, give or take, and $11.60 a share. So whatever this SPAC does in the short term will depend on the news that might eventually come out about a possible merger with Fenway Sports Group. So whoever takes any position right now is pretty much taking a gamble on a possible deal between Red Bull Acquisition and Fenway Sports Group.
In my case, guys, and remember, I am not a financial advisor, okay? I will probably take a small position here, say 100 or 150 shares, which is an amount of money that I can afford losing, because I want to be ahead of everyone else if this deal goes through, because I see a very nice potential on this merger. And as I said before, guys, as of now, RBAC is a big question mark, but this is a very big question mark that might could end up having a very profitable answer. Who knows? Okay, my fellow traders and investors, I'm going to wrap it up here, but before finishing the video, I want to tell you that in 1 or 2 weeks, I will be posting daily videos about SPACs from Mondays to Fridays. So if you want to see those videos in a timely manner, go ahead and subscribe to the channel if you haven't done it yet. Also, please hit that like button for me, that helps the channel a lot. And remember, this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the stock market in 2 different languages, English and Spanish, but most importantly, the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you in my next video. Peace out.